Hey traders, it's Greg from Trade90X. Hope everyone is having a good weekend. Today is the Saturday, the 6th of May when I'm doing this video. And again, I hope everyone's enjoying. I know the weather's here is nice, so I'm going to do this quickly and get back to my weekend. So again, hopefully you had a profitable week. Again, if you're not getting the results that you're looking for, then again, hit us up at hello@trade90x.com. Again, remember, we're almost at the halfway point of the year at the end of this month. So it's time to start, looking yourself in the mirror and really, asking yourself, what do I need to change? And if I'm doing well, just continue to build on what you're doing. All right. Now, each and every morning, pre-market, weekend, it's the same thing. I talk about it. It's rinse and repeat, repetition and discipline. It's about the same thing. It's about our plan. It's about our routines. It's about our journaling. Okay. So before we get started, always ask and talk with your financial advisor or accountant before risking any capital. Please also make sure you have 6 months of emergency funds before you risk any capital trading. Are we clear? Good. So again, it's the same thing every day. If you want to be successful in any business, you need to have a process. You need to know your numbers. You have to be robotic in your process. And people that understand that, not just about trading, but in business in general, they're the ones that usually put themselves in a position to succeed because they understand, it's about, working smart, not harder. That doesn't mean you're not working hard, but it's understanding the rules of engagement. What do I need to do for this specific industry, whatever I'm doing, and what do I need to do to be successful? Okay. Well, bottom line is, before you ever trade live, you need to understand how the markets work. That means education. Understand what type of trading suits your personality based on time and resources. Mastering risk management. Okay. Now, here at Trade90X, we're very clear about that. I don't care. We're position, swing, and day traders. We trade options and futures. Our risk is the same across the board. In active trading, we don't typically risk more than 1% of our account on any one trade. We typically don't, and we don't risk more than 5% of our capital in any one session. We don't look at trades unless they have at least a minimum target one of 2-to-1 risk reward. And we have clear and defined profit and loss targets every single day based on our risk profile. Are we clear with that? Good. Now, if you want to, again, be successful, this is why I talk about it every day. And if you're new, welcome. And again, I really do appreciate everyone who participates every day and watches our videos. Make sure, again, you share these videos with people that you know need them. Again, you have to have a back-tested plan with a statistical edge. Once you do, then you're in the sim and you're doing a minimum of 50 to 100 trades by symbol and time frame to proving you can execute your back-tested plan. Okay. Now, every day, every trade, you're going to also understand the importance of journaling. You've got to journal every trade and review. It's critical. Okay. The understanding of routines, the importance of pre-markets is where you're going to build your plan. Live market, that's where you're going to execute your plan. And post-market routines, this is where you're going to journal, review every single trade you took. Okay. You have to understand the importance of accountability and also the importance of participation with other experienced traders, whether it's our mastermind group at Trade90X or somebody else's. You've got to have and be around people that have done it, and you have the ability to ask questions. Now, with that said, again, we look at the same information every day, and we're going to run through that information. We're going to see what the bias is, and then we look at the chart. We look at the charts the same way. If you've been watching our videos, I talk about the same thing every day. And the reason I do that is because I have a process. Okay, I have a process. I have my routines. It's about the same thing every day. What is the market context? Who has control? Is it obvious? And then where are the decision points that I want to trade in the symbol and time frame? And then I use my setups and confirmation when price gets to those decision points. Okay, there is no guessing here at Trade90X. Are we clear? Good. Now, once we've done that, let's go look at the data and let's go see what we have going into Sunday and Monday. So the first thing we're going to do is we're going to look at the news. And again, everything I show you is free. Okay, I don't need to look at 20 websites or YouTube channels or CNBC. Learn the information we show you here. Every pre-market, every lesson, every weekend breakdown. Again, we give it to you for free, and it's always about what is the right information, where to find it, how to use it, and then how to package it into a high probability statistical edge. And that's what we do every single morning, every weekend. So now Monday and Tuesday, nothing that important, but then we get into Wednesday. We have CPI, you have core PPI on Thursday. These are critical. Okay. And you have unemployment claims, and then you have consumer sentiment. So Wednesday, Thursday, and Friday is critical. Now, when it comes to news, you know what I do. I don't trade into news. Remember, we understand market context. We understand who has control. We understand, is it obvious? We know our decision points based on the symbol and time frame. So all news is hopefully it moves price to our zones or decision points quicker. And if we get our back tested confirmation, we take the trade. We don't chase, we don't FOMO. We are professionals. Okay. Next, we've got earnings as well. So always be aware. Again, if you trade stocks, now here at Trade90X, we mostly trade indices. Maybe we'll trade a little Apple oil. So, you know, real typically on Apple. But again, it's critical if you, again, if you have a stock, especially if it's a stock that, you know, can move markets, you know, things like, you know, a Disney over here, you know, these are important. So just always understand what stocks are coming out, when they're coming out, and which ones, you know, like the Apples, the Amazons, the Googles that, you know, can really impact markets. But Disney will be important, definitely, because it also tells us about the consumer. So just be aware. And again, this is part of our daily process. Okay. Next, we look at the fear and greed index. And again, this is just a sentiment tool. And again, the reason I do this every day, and once you get good at this, it takes no more than 5 minutes. What I'm looking to do is I just want to understand what is the context underneath the hood. The charts are going to be the most important thing. But again, I just want to see what's going on because I want to also understand, I want to trade with the strength of the markets, if that makes sense. Okay, good. So right now we're in the greed. That means that the buyers have a slight edge. But again, when we're in that close to that neutral area, you know, it can get very choppy. I like it when we get down to the extremes. If we have a chart set up, to me, that gives us the highest, you know, risk reward opportunities. But right now, slight edge to the bulls based on this. Let's go look at barchart.com, go to stocks, go to market momentum. What I'm looking for here every morning, every weekend, is I just want to understand the breadth of the market. Now, we're below 50, so that tells me that the whole market is not participating in this, and that with 40%, the breadth is still weak. So we just need to keep an eye on that. Okay, good. Next, FinViz is a great tool, and on the weekends, I do a separate video because I have some people in the community that love to trade stocks. So I give you $1 million hack. We call it the Trade90X Watchlist Edge, and I show you quickly how to find, you know, what are the rules to find bullish or bearish stocks. Once you get that edge requirement that we have, and then it's, you know, again, I show you what is the, you know, entries and how we trade them. Okay, so stay tuned and make sure you catch that separate weekend watch list edge video. Okay, now I talk about this every day. Sectors and the S&P are the most important to me. Again, think of it red light, green light, confluence. If the S&P is bullish and I see the 1 day, 1 week, and 1 month, now 1 day doesn't make a trend, but when I have all these green, it's like driving a car. I know that I got the green light. I have confidence that I can take more than just a day trade. Same thing on the bearish side. If we have a bearish, clear, obvious context, bearish S&P, then I want to see these all red. Now, if they're back and forth like they are now, like the weekly is red and green, okay, the 1 day doesn't make a trend. It was green, but then we have green mostly. It's kind of indecision. So for what that tells me is I'll be very picky about my swing trades and I'll be leaning more towards my day trading strategy. But again, we'll look at the charts and we'll see. But right now, that's what I'm seeing based on the information we look at. Now, the two other things that I like to look at, I like to look at the, this is called tradingstar.com. It's the Commitment of Trader report. It comes out every Friday at 3:30. And again, what this is this is telling you about the smart money. Now, what is smart money? What does that even mean? All that means is that these are the banks, the institutions, the hedge funds that represent pretty much, you know, 70, 85% of the market. So again, we want to learn to follow the leader. And how do we do that? This is why I go through this, because I want market internals. I want to trade with the power of the context. And this tells you, again, on any symbol you trade. Now, I look mostly at the S&P, but again, of course, I'm look at NASDAQ and Dow and gold and the dollar and maybe the bonds, because I want to get a feel for where is the smart money. And if we look at this right here, I'm looking at asset managers, and we can see, look at it, there was 1 million versus 400. So there was definitely an influx of more longs versus shorts, but this is what really matters to me. Again, I don't give a crap what Kramer says or CNBC or 20 other sites. This tells you the real deal. This is telling you right now that the smart money has a bias 70% to the bullish side versus 30%. So what this tells me is that dips can be bought. If we were the opposite, where this was 70% short and 30% long, then all pullbacks to resistance would be shorted. Are we clear with that? So that's all this is. It tells me what the bigger picture is. All right, one other thing we're going to look at, and then we're going to get right to the charts. So what I like to look at is stockcharts.com. This is a free version. I like their pre-defined groups. Now, one of the things that I do like to look at, I'll show you on the weekends, I go to seasonality and whatever symbol, but again, I'm looking at mostly S&P. So, whoops, hold on. And this is the free version. So the paid version will go back, because I like to usually look back about 10 years. This is only going back 5 years, but here, what this does is it basically looks back 5 years. This is why, like I said, I like to look back 10, maybe even 15 years, and this will give you historical month by month. So now we're moving into May. So over the last 5 years, the S&P has only had a 60% chance of being bullish, but we see coming into June, July, incredibly bullish. So we'll tell you, when we get 75, 80%, okay, seasonality, that is a very high probability. And all you have to do is go here. So let's see, let's go look at the NASDAQ and Dow. So we look at NASDAQ, and we can see over the last 5 years coming in May that the NASDAQ has only been 40% bullish. Let's look at the other indices, Dow. Oops. And you can see here going into May, we've had the Dow is only 60%. So again, this is just a probability thing. All it does is it just kind of, okay, all right, let me pay attention. But I will tell you though, when I get 80% and above, that piques my interest, especially if you're looking at the S&P stocks, ETFs, and you can actually scan for that for stocks that have historical bias in that month, 80, 90, 100%, and again, if you get the chart set up, it's going to give you an edge. Okay, now getting back to the SPY, we see that again, May is at 60%, so we'll see. But again, the charts will tell all. So now that we looked at that, let me go and show you this. So I like their predefined. So here are the US markets. Let me just put on the Russell. So what I like about this is, again, once you really master the charts and understand how to read price action order flow, then this will be, and again, you just got to put the charts on. Remember, price can only go bullish, bearish, or sideways. Bullish is lower left to upper right. The smoother the price action, the higher highs, higher lows, the easier it is to make money. Bearish, upper left to lower right, lower highs, lower lows, the more obvious, the easier it is to make money to the downside. In a range is, equal highs, equal lows. Now, if we go to 6 months, see the SPY? I've been talking about this for weeks now. We're in a range from 3,800 to 4,200. So again, you have to ask the question, is price bullish, bearish, or range? It's in a range. Where is it? Now, if you guys are new, or if you've heard me talk about ranges are always the same. I don't care if it's in a 1 minute or monthly, it's the bottom, middle, top. We break it into thirds. And until price can break the top or bottom, we play the range. So my highest probability of a range trade are longs if we get the price action at the bottom. Top is if we get bearish. If we get below this, say 4,050, 4,000, I'm going to be looking for a price to rotate. Now, why is it important? Because I need to know the context, bullish, bearish, and a range, because if I was bullish here because we had this bullish price action and I didn't know it was a range, I could very easily end up losing a lot of money here because I didn't know it was a range. But if I know it's a range and I see it start going sideways in the top third, I'm probably going to move out into profit and then reevaluate. And now we're kind of in a range within a range. So we're not sure yet what's going on. So right now, when I'm not sure what's going on, then I can just tell you, unless the chart tells me something else, I'm going to be defaulting more to my day trading strategy. So right now we're in a range. We're at the top third of the range. So now we need to see, are we going to break below or do we break above? Now, my rule, again, whether it's a 1 minute or monthly, and I talk about this every day, if we break above or below a range, I'm looking at range expansions. Now, the range expansions I look at are usually 125%. 150, 200%. And I'll show you that in a minute, above and below. And these are just things that I picked up, again, that work. Now, the other thing that I also pay attention to is gold. I want to see what the 10-year, the dollar, and the VIX is doing. Because if we're moving higher, these should be moving lower. And if these are moving higher, then we should be going lower. And if these are moving down, we should be going higher. So right now, we're kind of in a range with the dollar here. They're all kind of in a range, so we're not sure. And this is in a range, so we could go either way right now. So all I can say is until price gives me an edge, I'm going to be day trading, and I'll show you how we do that in just a minute. Are we clear? Good. Now, because it's the weekend also, let me show you this other one. So one of the other things what I always do is if you're somebody who likes to trade ETFs and stocks, again, what I always look at is what is the S&P doing? Well, we're in a range from 38 to 4,200. Where are we? We're in the top third of the range. All right. But from here, the last month or two, we've been moving lower left to upper right. So what I'm looking at is I'm someone who trades ETFs or the market leaders in that ETF. First, I have to understand what the S&P is doing. Then I determine, is the S&P bullish, bearish, in a range? Well, it's in a range right now. So right now, for me, there's not much to do until we see more definitive trend, bullish or bearish. But while we were moving up, what would you be doing? Well, all I can tell you is bullishness is lower left to upper right. And all I can look at, I can quickly look and see XLC, XLK, XLV were very nice. Now, XLP also has been very nice. So all I can say is that while the S&P was moving up, I would have been looking at trading, if I don't like to trade the the S&P, I would have traded one of these ETFs, or I would have looked at the market leaders. And here, let me show you quickly. And this is why I said, once you master this, so here's the here are the Dow stocks, the Dow 30. So let's just say the Dow and the S&P are bullish, okay? I can quickly look, because I have a trained eye, and I can quickly look. Let's see if you can do. Tell me which one of these symbols would you say we're bullish right now? Let's just say we're bullish. Which symbol would you be going after? Okay. Now, if you said Apple, 100%. Look at that, lower left to upper right, giving you clear higher highs, higher lows. And what I look for is I look for clear momentum into a pause or pullback. Now, on when we're looking for bullishness, I'm looking for, a pin bar, an engulfing or doji candle. And on the bearish side, I'm looking for engulfing and dojis, but I'm looking, instead of a pin bar, I'm looking for a shooting star with the wick on top. All right. So Apple, 100%. What else? No. Again, I want it to be so obvious. All right, right there, Coke. Look at that, lower left to upper right. So, are you getting the picture? So, the first thing we always do is, again, what is the news? What are your earnings? What is the fear and greed telling us? Okay, what is the breadth of the market telling us? What are the sectors telling us along with the S&P? What is the long term telling you? Well, it's telling you right here that the smart money, the bias is long 70 versus 30, so dips can be bought to the bullish side at support. So once I do that, now I go look at the S&P, or if you like to trade NASDAQ, I like to trade Dow stocks or S&P. And all I can tell you is that if the S&P is bullish, Apple look good right here. Coke, look at McDonald's. Look at it. Do you see the difference between these? Okay. You see the difference right there? So Coke, McDonald's, and Apple. Now, Procter & Gamble looks okay, a little gappy for me. So remember, all you need is one stock to do what you need it to do. So right here, these two, these three right there, Apple. And by the way, those are three stocks that I would trade for the long term anyway, because these are also great dividend stocks that you definitely want to own for the long term. Anyway, that said, now let's get to the chart. So we clear basically right now, you know in the news, you know with the earnings, Okay, slight edge to the bulls, but the breadth is still below 50%. That worries me. And here we still have indecision. We'll see what happens Sunday and Monday, but right now it's giving me a little indecision. So I can just tell you that right now, unless I see something in the chart, we're going to be leaning more towards our day trading strategy. Now, with that said, let's go look at the charts. Let me take that off. Let's keep a clean chart. So one of the things that we do is it's very simple. We look at the monthly. Okay, we look at the monthly as our main trend. The monthly is going to tell you your main trend, monthly and higher. And what are we looking for? Are we bullish, bearish in a range? So we've been moving lower left to upper right. We had the pandemic, but we quickly, you can see right here, we quickly snapped back and came right back up. Okay, came right back up and shot right back up. And I guarantee you, let's measure this. If I take the fib tool from swing high to low, look at that. It was right around that 50, 62%. And I'm always measuring swing highs, whether it's a 1 minute or a monthly chart. I'm always looking at where is, let me just clone that. Where is my 50, 60%? And again, these are just some odds enhancers that I look at. All right. And I will tell you, if we pull back anything above this area, then it's even more bullish to me. So here, we had this leg right here, swing low, swing high from the pandemic, and look at that. We hit that 38, 50%. That's bullish. Okay, but right now, what is the price action telling us? The price action is telling us that we're in a range from 3,800 to 4,200. Until we can break above or below, we easily could just rattle around. So what do we look at ranges? Again, we look at them, we split them into thirds, bottom, middle, and top until it can break out. Now, our intermediary trend is going to be anywhere from our 15-minute to weekly. So I don't care if you trade crypto, stocks, futures, options. It doesn't matter to me. As long as it has liquidity, this is how we break down the charts. I want to know what the main trend is. I want to know what the intermediary trend, 15-minute to weekly. And then also, if we're going to day trade, we'll use our 15 and 60-minute as our anchor chart, but we'll make our entry anywhere from 1 minute to 15-minute. And I'll show you that in a second. So right now I'm going through my progressions. You can see on the weekly, we're in a range. Now, if I go down to the daily chart, you can see we're in a range right here. All right, now on the daily, I can tighten it up a little bit. There we go. So what I like to do is I like to do my slower slower swing trades anywhere from a 1 hour to a daily. So let's put on a 4 hour. So we know, take that off. We know we're in a range. Again, how do I treat ranges? Bottom third, middle, top. Now, my favorite trades of a range are going to be I'm going to show them to you right now. I don't care if it's a 1 minute or a monthly. My favorite trades are going to be in the bottom third and top third. The middle of a range, you can trade it as long as you back test it, but a middle of a range is I'm going to go half size. Why? Because it's choppy. Okay. And I must have a 2-to-1 risk reward to the top or bottom to even consider the trade. Are we clear? Good. So now what I do is when I see the chart, I set my alerts, and when price gets to the area like it's in now in the top third, do I have my setup? Well, and right here, we have a little shelf right here, and you can see we had rejections, 1, 2, 1, 2, 1, 2. So one of the things that I like to do is I'm always looking here. So you see right here, look left. I'm always looking left, squeezing the chart. And you can see we've been rejecting in this area. So what I like is this would have been my first setup. So my first setup would have definitely, we had this bullish run. We had 1 try, 2 try, and that would have been my short. And I'm looking down at the middle and then at the bottom. Okay. That's trade number 1. Let me show you number 2. Number 2 will be something like this. We get above the range, but then it quickly snaps back. We call it the fake out breakout. We went from bullish and now we're bearish, fading short. Okay. Actually, it's up here. Sorry. Up here. No, I'm sorry. That was right. That's the expansion. Sorry. So that was trade number 2. Now, number 3 would be something like this. If we can get above right here, this is also a yearly. We get above that, you know, this level in the yearly. I'm looking up then at these levels right here to be bullish. So those are the 3 trades at the top third. The bottom third is going to be anywhere in this bottom third. We reject, making higher highs, higher lows. I'm looking back at the middle, back to the top of the range. Then we get the fake out breakout at the bottom. Comes back in, snaps back, and then we go long. And then if we get the personality change where we actually break with momentum, I need to see 1 try, 2 try at or below the bottom of that range. And then I'll be looking at range expanded target. So those are typically the 6 trades that I look at in any range, whether it's a 1 minute or monthly. Remember, the middle, I don't mind taking the middle if it's a clear setup. Like this would be around the middle, right around there. And if we get the retest, but it has to have 2 to 1 to the top or bottom. And I'm going to go half size. Are we clear? Good. So now, once we have that information, now let me show you how we can do faster trades. So I'm going to show you here on the 15-minute chart. Okay, good. So we call this the Trade90X for context situation strategy. And what I use is I use a 15 to 60 minute as our anchor chart to determine immediately, are we bullish, bearish, in a range? Okay. Now, how do I do that? So the levels I'm using are predictive, not lagging. They quickly tell us the story. This is why I backtest, journal, use my routines, backtest, journal, routines until this becomes second nature. It's context 1, 2, 3, and 4. Okay. And the faster that you understand what context 1, 2, 3, and 4 and what these levels tell you, the faster you're going to get, you're going to have an incredible process. But until you backtest, sim it, journal it, use your routines, it's not going to work. Okay. You can't just open an account and think you're going to do it. So first thing I always do is, now let me show you previous day's high, low. Okay. Here's your midpoint. All right. Now the weekly is your purple lines, which we can't see them. They must be in here. The orange lines here are your monthly high, low, and this bigger, thicker black one is your yearly high, low. The other things that I use the pivot and the Camarilla pivots right here. Above R3 is bullish, below S3 is bearish, R4 is the breakout pivot, above bullish, and below S4 is the breakout bearish. Now, so again, we're using the previous day's range, the weekly, monthly, yearly high, the open range right here with the previous day's close, and the pivot with the R3, S3. And I'm going to show you how to quickly do that. So first thing we're going to do is on the 15 and 60 minute, we're going to squeeze the chart up. I want to see first what the context is. And it's very clear if you understand how markets work. Price basically consolidates, what we call this accumulation. When it breaks out above, this is markup. It means it was bullish. Okay. Now we're kind of in another consolidation. And that's what price does. It goes from consolidation to expansion until it either breaks up or below. Right now we're in kind of this consolidation distribution, and we don't know yet until if it breaks out above or below what's going to happen. All right. So we know that these monthly and yearly levels are very important. We have the previous day's high, low. And what you're going to do is you're going to come in and you're going to ask the questions. Where is price? Is price above the previous day's range? Below? Okay. And if it's above, we call that context 1. If it's above or below the range, but it has to be making clear higher highs, higher lows. Otherwise, that's not an obvious trend. So if it's above or below the previous day's range, that's telling us that we're actually bullish or bearish and that we have a at a balance trending day. Why is that important? Because context number 1 is the only time I'll consider a swing trade. If price is inside the previous day's range, it immediately tells us that it's a neutral, balanced day, and that until proven otherwise, we're going to look to fade the top third, bottom third, or look for fake out breakouts at the previous day's high, low. All right. Now, before we get to what those are, I want to show you what context 4 is. Context 4 looks something like this. Context 4 is basically, we call it context 4, and it's basically price action we can't figure out. It's tight ranges, high volatility candles. And when we see that price action, we immediately do nothing. So you have two choices. Number one, you do nothing and you wait for context 1 and 2, 3 setups, or you pass and go to another symbol that has context 1, 2, 3. But you must be able to identify and go, nope, context 4, nothing to do until I get context 1, 2, 3, back-tested statistical edge setups. Are we clear? Good. So let's go through again. Number one, price above or below is context number 1. Price inside the previous day's range is context number 2, and we'll go through it in a little bit more detail. And I'm looking at trades to, remember ranges, top, middle, and bottom. If we get bearish price action, I'm looking for shorts at the top third. If we get the bullish price action, I'm looking for bullishness at the bottom third. Context number 3 is going to be your fake out breakouts at the previous day's high low, like something like this. See this right here? Price came back up, put and hold, rejected, and nice short right there. So our favorite trades, I can only tell you from us, are going to be top third, bottom third, fake out breakouts of the previous day's high low until price can prove back. Now, all I will tell you is also any bullish trade, I want some support. Any bearish trade, I want resistance. Now, remember, when price is inside the range also, what is price doing? Is it bearish, bullish, or in a range? Okay. So now, first thing you're going to do, now I always look at the ES first. We've identified by squeezing the chart, we're in this bigger consolidation from, again, 4,200. And this shorter term one is about 40, let's call it 40.61. So really, until price breaks above or below this, we're kind of stuck in this mini range within the bigger range. Are we clear? Good. So once you understand that, you can see right here, we've been making lower highs and lower lows. And what's interesting is this was the last lower high. Okay, this was a minor one, but this one was a low. We did break this one, but this one right here, we couldn't break it. So unless we break up above this coming into Sunday, Monday, we could see, if we start getting a retest back down, we could see price just fail. But let's see. Now, let's tell me on Friday what was the price action. So when we came in, and again, we're usually coming in around 7, 8 o'clock, which is right about here. And let's bring it down to a 5 minutes so we can see some more structure. Now, remember, always have your 15 and 60 minute, because what we're looking to do here is we have to always stay on top of what is the context. Do not use a time frame where you lose track of the context. And the context is, where is price in relationship to the previous day's range? Is it above, below, or inside? We've talked about it. Okay. So it's critical. Once you understand this, then you're going to know what to do. Now, I don't care if you trade Renko, tick, range charts, but if you don't know what the context is, you're going to end up making the wrong trade. So right here, coming in right here at 8 o'clock, the electronic market, we were in a context 2 inside the previous day's range, but we were also in a context number 4 where I have no edge. So I am basically doing nothing. Let me just put, so I'm not doing anything over here until price shows me something else. So coming in right here, this was right around 9:30, we had a nice break and retest above this range. And again, as I mentioned about ranges, top third, bottom third, fake out breakouts, the middle, we'll trade them, but we're going to go half size, and we have to have 2 to 1. So we do have the 2 to 1 risk reward to the top and bottom. I can eyeball it, and we go half size. This was a nice setup, okay? And it worked out. Now, what was the other setups that you see? Now, this candle is what I call, this is too big for me. It's a volatility candle. Not much I could have done right there. But now we break out above. And really, the best trade of the day was right at the open right here, because this was just parabolic right here. I mean, you had this, but I don't trade usually past 11:30. I'm usually done by the European close, and this was kind of right at the end of the market. So this was the trade of the day. And again, also, it's not where price closes, not where price opens, is where it closed. And where to close? Well, it definitely closed super bullish. And it also closed at a key lower high. So we're going to need to watch that and see if we can get above this area. Okay, are we clear? Good. Now that we understand, let's go run through these other symbols. Let me just put it on about a 10, a little bit larger. Okay, let's run through these symbols and tell me what was going on. So NQ right here, same type of thing. Opened up context number 2 into context number 4. Nice break and retest. This was a very big volatility candle. This again right here was the trade right there. That really was that A trade. Gave you great risk reward. But again, NASDAQ closed super bullish. What did the Dow tell us? Same thing. We were in a context 2 into a context 4 price action. Right here. Break and retest right there. Beauty. Now, this was also a nice setup if you were trading the end of the day, but this right here was a beauty right there. Beautiful, beautiful. And this would have been a good setup, but such a big volatility again. I hate those. Good setup right there. Let's go look at Russell. Again, same thing. You had a context 2 into a context 4, and then you had a break and retest. Beautiful wick right there. Beautiful, beautiful. Now, Russell gave you 2 trades, but this really was the better trade because it's toward the middle. This one's in that top third, and this was, for me, right at the middle. That was a nice trade. Again, middle half size, okay? And you have to have 2 to 1, definitely. And where to close bullish. So all the indices closed absolutely bullish. Okay, I don't need anybody to tell me that. Let's go look at a few more because I want to show you all different symbols. Here's oil. So again, when you came in right around 8 o'clock, so we usually come in, we start usually, I'm doing these around 7 to 8, and then we're getting ready to go right around 8 to about 11:30, the European close. So look what happened here. And then also always understand where you are in relationship to the previous day's range. And also, if you're inside the previous day's range, are you at the top, middle, and bottom? What is price doing? Well, it was definitely trending up. It held the open. Beautiful right there. If you're not trading the pre-market, this would have been your trade right about there. Came up, momentum, break, retest at the R3, we held, and next target R4 and higher, and then it went right into the end of the day. And again, oil also closed bullish. What about gold? Okay, what happened right here? So gold opens up, the gold market opens up at 820. Okay, right there. So tell me what was going on in the overnight. Now, the overnight, look at that. Beautiful, beautiful, beautiful. You have right here, break and retest. Yep, very nice. Now, this candle's too big, unfortunately, and didn't give us much. And unfortunately, that's trading sometimes. All right. Now, what happened with gold? Opened up context number 2, closed bearish. Context number 1, below the previous day's range low. Let's look at a few more. So here's the euro. Again, where was it in relation to the previous day's range? Remember, above and below is when, if it's trending, that's telling you it's an out of balance day. And that's when you can look for trend trades and pullbacks to support for longs and resistance for shorts. But if we're inside, we're looking for top third, bottom third, fake out breakouts for the highs and lows for the highest probability. The middle, we got to be cautious. So now tell me what you see right here. Again, we're in that middle. In the middle, and we have 1 try, 2 try, right at the middle. So again, if the middle is part of your plan and you're okay with it, and it back tests well. This gave you a beautiful short. And then look at that fake out breakout context number 3. So this gave you a context number 2 short, a little bit lower probability because it was the middle, but look at that beauty right there. I don't care what time it is. I'm showing you. I mean, this is really, I love this. Look at this. You get this beautiful, the sellers think, okay, we got it. And then the buyers just snap back, you break and retest, you get the engulfing. And that's a beautiful long. Only problem is it did happen at the end of the day. But again, I'm just showing you the setup. Sometimes we don't get to choose the time. Now, we typically trade, like I said, 8 a.m. to 11:30. And unfortunately, this is going to happen at 3, 4 o'clock. Nothing I can do about it if I'm not trading that time. But again, a setup's a setup, so I want you to see it. And now let's go look at crypto. Okay, let's look at crypto. So you can see we've kind of looked at currency, we looked at gold, we looked at oil, we looked at the indices. So you're getting a full mix. So here is Bitcoin. This is live right now as I'm doing it. So again, squeeze the chart. And you can see that Bitcoin, just by squeezing the chart, look, you've had consolidation, expansion, consolidation, expansion. It came back into this consolidation. Now it's coming back down, and then let's see what happens. So we're kind of in this bigger range, but again, where is price in relation to the previous day's range? Look at that beautiful setup. Let me tell you, when you have ranges and then you get these confluence, you have the previous day's high, R3, and a monthly right there. Look at that context number 3. Fake out, breakout. Oh, man, I wish I could have been there to take that trade. So now, look what we have here. We've got this kind of inverse head and shoulders. We've got this beautiful, right here, beautiful wick right there. So I will say, if we get something like this, got the momentum, and if we get that rejection with a bullish candle, I'm looking for a long. But this, man, that is as good as it gets right there, that context-free rejection in a range, okay? All right, perfect. So let's wrap this up. And then don't forget, I do a separate video called the Trade90X Watch List Edge for the people that want to, who like to trade, stocks, ETFs. All right. So let's wrap it up. So again, we always look at the news. We look at earnings. Remember, we do not trade into news and earnings. We let it come out. We always are aware of the context. Who has control? Is it obvious? And we know our decision points. So there is no guessing. Okay. Next, we look at the fear and greed index. I want to just understand what's going on. I want to see market momentum. I want to see stocks, market momentum. I want to see the breadth of the market using the 50-day moving average. Here, the sector information are for active trading, especially 1 week, 1 month. I want to know, do we have that confluence? Yes or no? Commitment of trader report. Again, I showed you what is the long-term smart money bias. And then I showed you here how we use our predefined to really look at, the indices, how we look at the S&P against the sectors. And then I showed you the Dow 30 and then focusing, how to focus in. All right. So with that said, then we went to the chart and we looked at the monthly for our main trend. We use a 15-minute to a weekly for our intermediary trend. And then I showed you using kind of a 4-hour chart, how we use our slower swing trades. I showed you how we look at it. Remember, price can either go up, down, or sideways, and we're in a range, so we understand what a range means. And if you don't, hit us up at hello@trade90x.com. Until we break out of that range, we have to respect the range. Now, while we're in that range and we're trying to we're waiting for the trade, we look for our faster swing trades on our 15 and 60-minute, and then we use our 1 to 15-minute for our entry for our day trades. And I showed you using our Trade90X for context situation strategy, using the previous day's range, weekly, month, or yearly high, the open range with the previous day's close, and understanding what it means, context 1, 2, 3, and 4, where is price? Is it above? Is it below? And then again, based on being above or below, we then understand what context 1, 2, and 3 looks like. We understand that context number 4 is when price, we can't figure it out. We have no edge. So coming into Sunday, Monday, okay, we know what our plan is, and then we'll break it down again Monday morning to refine it pre-market on the indices to really look at where the market is. But right now, as of right now, definitely, you know, there is kind of there's it's a weak bias. Again, we're at that top third, the breadth is weak. And again, until I see more clarity, we're going to use our day trading strategy. I just showed you our 4 context situation, but we can use it for our swing trading as well. Now, if there's any questions about the weekend review, again, and if there's anything you don't understand about how we broke down the data, how we break down the charts, how we use the 4 context situation strategy, just hit us up at hello@Trade90X. I'm here for you. Again, I want to see everybody do well, so don't be shy. Ask the questions. Okay, I look forward to it. Enjoy the rest of the weekend, and we'll see you back Monday pre-market. Be safe.